Well, hello, everyone. This is the Maverick Currencies year review for 2022. I want to welcome everyone here. Appreciate your time. And tonight, joined by Rob as well as Ankit. So let's go ahead and get started. We did make a shift in the curriculum to more consciously and consistently focus on that trader psychology. And I think that's one of those reasons. I've got to put it out there to all of our traders here. Thank you so much for the way that you traded in 2022. You made our lives a lot easier by focusing on this psychology earlier and really following your trading plans and managing your risks. So on behalf of everyone, I really want to say thanks for doing that. In conjunction with this, we launched our trader personality test website. And what that allows us to do is to better integrate the personality tests early on in a person's trading plan. And the great thing about this is not only can you go out and you take the test and it'll show you your personality and it goes in depth on what your strengths are, what your weaknesses are, but then after you've gotten your report, you can go in and see what other people's strengths and weaknesses are as well. You can get the reports on those. So if you've got a person that you want to trade with or thinks they might want to trade, then you can take them to the site and have them go through the personality test. And then you could go over it with them and say, I bet these are your strengths in trading. I bet these are your weaknesses. And with the first time you do this with someone, it's eye-opening for them. They can't believe it. I mean, they say, you just nailed everything that I've done wrong in trading for the past 10 years. And I never knew it was my personality that was actually affecting this.
And let me just jump in here. And hi, everybody. This is Rob. And I just have to echo Darren's comments. Great job this year. Really great job. The personality test site, I hope everyone understands, this has been like 3.5 to 4 years in the making. We have had this idea and we have been working on it, and it took a lot of work to get this going, but this is the only Myers-Briggs based personality test out there on the internet specifically for traders. And that's why we wanted it. We wanted it to be specifically for traders. So we had to put together all the questions that a trader would experience in order to be able to judge that personality. So if you haven't had a chance to jump on it, we really are happy with it. Jump on it, share it with all your friends. It's a really cool thing to go through.
Third topic that we wanted to discuss is that we really started leveraging YouTube for our non-curriculum videos. Is we had a lot of people request, hey, is there someplace else that I can see this? Otherwise I have to log in to the members area, go into some of these videos, and then I've got to play it from the website. And sometimes you don't have the time to do that. So we've been putting a lot of the non-curriculum stuff up on YouTube so that people can get better access to it. They've got 10 minutes. If they've got 5 minutes, they can go through. And a lot of these non-curriculum videos, we've made a lot shorter. Okay, and we've especially put a lot of our psychology corner content in those. And it's really helped out. We've got the feedback we've gotten is great. Hey, I've got 20 minutes during my commute. I can actually sit down and view this. I can pause it and then pick up where I left off at lunch or something like that. So that's really helped out with our traders as well. So let's take a look at the numbers here. So our 2022 predictions. Okay, we estimated that the equity markets were going to be lower in 2022. Well, and we said the S&P was going to be down 10% and the NASDAQ was going to be down 20. We were half off on that one. Okay, the S&P was down 19, I believe, and the NASDAQ was down nearly 40%.
And Darren, I think if you take a look at this year, when we had our predictions, and we always like to make these predictions at the first of the year, we make these predictions and then we put this away, and I don't even know what they were until we check again the next year. And when we take a look at all these, we were bearish, but we were just not bearish enough. That's really what it came down to. When we looked at equities, we said, hey, we think it's going to be a down year. It was down more than we thought. And we thought interest rates are going to go up. The Fed was saying that, hey, we're not going to raise rates in 2022. They said we're going to raise them in 2023. We said, hey, we think they're going to raise them twice. Now, that was crazy. That was way above what people thought. No, they raised it 7 times. So we thought they were going to go up to 2.25, and we went well past that. Now, Darren, I know you've been the inflation hawk here, and you've nailed it. What did you think about how much the Fed raised this year?
I didn't think it was enough. I think it was something they had to do. It's slowly dawning on them that they screwed up a lot of stuff, that transitory inflation was not transitory, or the transitory nature of transitory inflation is not transitory at all, and that they've got to get ahead of this. They've got to get that rate up to at least what inflation is. I think that's where they got to go. So I see a couple more rate hikes to get us up to about that 5.5-6% rate. But we can talk about 2023 predictions in a little bit. But I definitely think that they're behind the power curve.
Darren, when you were talking about transitory, and you said transitory like 10 times, are they ever going to live that down? Remember when they said it was transitory and it just took off? People are mocking them, and just like you mocked them with the word transitory.
They deserve to have that tattooed on their foreheads backwards so that every time they look in the mirror, it's staring right back out.
Absolutely. And let's take a look at Forex here. Our call was that the yen was going to be the weakest. Now, we nailed that one. But we said the Aussie and Kiwi are going to be the strongest, and they were really middle of the pack. So I'm going to have to say B+ on this one. Let me rate all these. I always like to rate these. I'm going to give us a good B+ on the rest of them. So we were close, but we were just not bearish enough. Ankit, I know you were very bearish on the yen for most of the year. What was the basis behind that call?
Oh boy, that 2022 was quite a year. And again, I got some things right, and some things definitely was really that came out of nowhere. I think with the Japanese yen, I think what we have seen is this yield curve control that they have been kind of going after since 2016. So I think this was just a year where all these central banks were really making, powering these moves. And the Bank of Japan is really behind the curve. And again, I think still to date, it's the biggest, hottest topic because they are the one, they have kind of stick to the guns. Everybody changed the policy except Bank of Japan. And I think that's the one that really was easy to call for because they were very clear not making any changes to it. So I think that was really the biggest declining factor for the yen this year. And again, this is a year where traditionally, we see this flight towards safety and yen spikes up. And it didn't happen. So a lot of times, when we get what should happen, then doesn't happen. I think it's a pretty solid call that, it's likely to continue its own thing because it's not really taking part in that risk on and risk off theme. So I think this was quite a remarkable year. And I think it's a learning year as well because this is a year where we went outside the norm of these, what should happen, what should have happened, not. But just really focusing on what the central banks were doing because that's really where it was pretty clear where the movements happened this year. If you just follow the central banks, I think it was easy to make these calls.
Yeah, the Bank of Japan really did their best to ruin the yen. They really, really tried in 2022. The first of the year in 2022, we said this is the year that the crypto bubble pops. And sure enough, it popped, and it popped badly. But again, we were bearish, but probably not bearish enough. Most of the cryptos were down around 65 to 80% for the year. So we'll take a look at the performance here in a little bit on cryptos. But as far as the call goes, that was definitely an A. And I don't want to say it was, a great call because it was a pretty easy call to make. When you have a bubble like that form, it's very typical that it pops. Now, look, getting the timing right, sometimes that is more luck than skill, but there was an easy call on that one. And then lastly, we called commodities were flat overall. Now, the one thing we did not have on our bingo card was the Ukraine war. And oil zoomed up from that. But by the end of the year, it had come all the way back down to where it started. So yes, I want to say I can give us an A on oil flat. But it was anything but flat. It was a huge roller coaster. So overall, I think we had some pretty decent predictions. But guess what? No one cares. The market doesn't care. We don't care. 2022 is in the bag. It's in the books. We can't go back to it. And that's what I love about the start of every year. The market doesn't care. The market is forgotten. If you had a good year last year, it's not impressed with you in January. If you had a bad year last year, it doesn't remember that in January. Everything's wiped out. We have to produce for this whole year. So let's go ahead and go through the numbers, and then we're going to take a look towards 2023. So here are the equity returns. S&P down 19%, NASDAQ down 33%. If we take a look at the chart, here's what we really see is this very long-term downtrend. We are right here. It is January, boy, I gotta look at January 17th. Boy, without our phones, what would we do? All right, January 17th. So we are literally right up at this trend line. We'll have to see what happens, but this was just a long-term downtrend here. And most people new to trading have never been in a long-term downtrend. The last one happened in 2008 and 2009. Until the S&P breaks out of this, we are likely headed lower in this, but we'll wait for the predictions here. Now, that was just the US markets. If we look around the world, we saw a lot of crazy returns. There were a couple places that were really positive. Like, take a look at Norway, up 37%, Turkey up 105%, Nigeria up. But you take a look at North America, is down, but Mexico and Brazil really outperformed. The one that surprised me the most was the UK. Now, England had a terrible time with their economy this year and a terrible time with their currency. At one point, the pound was almost at parity with the dollar. That's just crazy. I was very surprised to see they were only down 5% for the year. The one thing that also stands out is Russia down 100%. Now, look, we don't know what the value of Russian equities are because they're no longer traded in the Western world on exchanges. There still could be value, but what is happening is Russia is basically nationalizing a lot of the companies. So if you had investments in Russian companies, you likely don't have them anymore. They were simply just dissolved. Asia was where most of the pain was felt, and this was really due to the lockdown in China from COVID. Now, that is going to be a theme going into the next year. Is China going to recover? So here's our call for the 2023 equity outlook. We think it's going to be a down to slightly up year. Now, I know that's a fairly big range, -10 to +5%. We think it's going to be somewhere in there. And basically what we're saying is there's probably a greater chance of it being negative than positive, but we think overall it's going to be about sideways. However, we do think international is going to do better. And a lot of that is from the weakness in the dollar. The dollar was the strongest currency last year. A weak dollar is really going to help international equities. We also really like the materials sector, the metals, the chemicals, gold, silver, copper. We think all of that is going to do quite well. Darren, what is your call on equities? I know you've been more bearish than I've been, so let's hear what you have to say.
Yeah, I mean, I think the NASDAQ could quite possibly get a down 20% year. And that's going out there on a limb, I realize, but I think the S&P does end up being stronger in that, and I think my range is I'm looking from anywhere from -10% to a flat return. I think one of the risks that we run is 2023 turning into a very choppy market like 2015, and that just being range bound for the entire year. It looks like we break above or below a range. The trend starts, then we fall right back into the range, and we get a lot of head fakes. So that's where I'm looking at equities right now. That's one caution I have for anyone that wants to trade equities this year.
Yeah, I think that's a good call. I think a choppy market with a slight downward bias is probably about what we see for the year. That's definitely my call as well. Let's talk interest rates. What is going to happen with interest rates? Now, of course, this is Powell. We're talking about the U.S. here, but this is really around the world. This is where all the global central banks are basically all on board except for one, the Bank of Japan. The Bank of Japan is the only one, and guess what? They are being dragged into starting to raise interest rates. They're just being pressured too hard by the markets. So we think this year that the Fed's going to start off very hawkish, and we're going to see a couple rate hikes at the first of the year. We're already seeing headline inflation cool. Now, headline inflation is gas, groceries, a lot of the things you buy in stores. Core inflation, which is things like wages, rent, those aren't as easily cooled down. So I think we're going to start to see headline inflation cool down, but that core stay hot, which means that the Fed has to stay hawkish. However, because inflation won't be out of control anymore, it'll just be persistently high. I think the Fed is going to get to a point where once they raise enough, they'll basically just talk tough, but won't actually do anything. The 10-year right now is right around 3.5%. We think that the Fed is going to continue to raise. So these rates are likely to go up. The big question is, how much? How much are they going to go up? Now, I know I've got the 10-year going up to 5%. Ankit, what do you think the 10-year ends up, the U.S. 10-year ends up at the end of 2023?
I mean, that's a very good question. And I think if you just take a look at how things kind of unfolded in 2022, I think it all depends on where we are at what part, if we might have different reading as different part of the year. I think if I take a look at the end of the year, I think we might plateau between 5.5. But again, I think we still need to be prepared. What if in case the inflation picks up? And I think that's the kind of a fear right now markets are kind of overlooking, but I think this 2023 is going to be another challenging year where the biggest kind of something kind of come out of nowhere is if there's a bit of a rise or a shock in the inflation that numbers picks up. But outside of that, I think if you take a look at the Fed Fund futures, I think they are kind of pricing in a rate cut by the end of the year. So I think the markets are getting ahead of itself. I see two different pictures right now. I don't see the yields coming down as much, but the markets are definitely pricing that in as we get towards the end of the 2023. So I think this 2023 will be another crazy year where we might see things climb up, we might see things fall. But again, this is where we might need to shift our outlook throughout the year. But we might end up flat for the end of the year. So who knows, right? But I think the key to trade these markets are to be flexible. Last year we saw some very powerful moves both ways. So that's what I expect. I think we still have a lot to kind of go through. Markets are overlooking it right now, but as we started off this year, we still have a lot to go through before we put a pause to this.
And 2022 was a great year for Forex trading. And I remember you and I were talking about this all good. I want to say 2013, 2014 was the last time I thought the FX market was this good. What did you think about the movement we got?
Yeah, I would say, it really reminded me of back in 2015 and 2016, just because, that's when we had the Brexit, we had the U.S. elections, we had the Bank of Japan, adopting the outlook for, the yield curve, and we had this, China collapse back in 2015. So I think that 2015 to 16 was really where I could see, and last time it really moved things like that. But after that, I mean, things have been a lot more in a smaller range. I think that's the biggest thing. The percentage moves were humongous compared to what we've seen in the last few years, which again, I know that was a big new experience for a lot of traders, that things can move outside of those normal moves that we have been used to for the last few years. So I think we are back in that, volatile era. 2015 to 2016 is where I could really look back and say, well, that was a crazy volatile times.
And thank goodness, because we do like higher volatility here. You brought up China and the collapse we had in China in 2015. China was really on hold in 2022 with their zero COVID policy. They have done a real big reversal on that. And I think the real wild card this year is China. And when you take a look specifically at inflation, if the Chinese economy comes back online and actually starts growing quickly, I think that is the real risk to upside inflation. What do you think, Darren?
Yeah, I mean, I think that is a risk globally as well. I mean, looking at these bond yields, though, my bingo card has the 10-year getting up to 6%, and I see mortgage rates going between 7.5 to 10. So I mean, I'm even more hawkish on inflation this year than I was before. I mean, that's got some really interesting implications as far as first-time home buyers, existing home buyers, even commercial rates as well. People might just be stuck. But yeah, I mean, if China can get all its ducks in a row and really crank things out, that's going to have ripples across the entire globe. And then I think that at that point, every central bank has no choice but to raise every one of their rates.
And that's really one of the weird things is that, everyone will look at China and say, oh, if China comes back online, that's going to really help economic growth, which is true. But it might actually cause even higher inflation, which is going to cause even bigger economic slowdown. I think it's a mixed bag of what happens with China when they do come back. It's going to be very interesting to see this year. Let's make a jump over to the Forex performance. Worst currency last year was the yen, down 12% as a basket. The best was the dollar, up 8%. And you can see everything else was down compared to the dollar, but just to varying degrees. Let's take a look at the charts of all of these currencies, just strictly of 2022. And the first one I want to focus on is the dollar. So we have the dollar here, and you can see that for the first 9 months of the year, the dollar was just a rocket ship. Now, I know this chart doesn't really take in percentages here, but we started the year at 110 here on the dollar basket, and we got up to 132. That is about a 20% return on a currency. That is huge. That is humongous in the world of currencies for something to appreciate 20%. And then look at this reversal we saw in October. I want to then now jump right over here to the yen chart because it's literally the inverse. We were down. And if you take a look how much was down, about 20%. And then we did get a bottom in October, and we've had a pretty sizable move back up in yen. The reason we've loved the dollar yen this year, because it has been so negatively correlated. This has been a currency pair that we've really focused on, especially the last couple months, as probably one of the best trading pairs because the negative correlations are so great. The first of the year, it's starting out to be a great trade as well. We'll have to see if this follows through the whole year, but dollar yen are definitely moving opposite of each other. Swiss franc is doing what Swiss franc does, goes nowhere for most of the year, has one little spurt, and then goes nowhere for the rest of the year. So we got a little spurt from June to October. Outside of that, it did nothing. The euro was mostly weak, got down to almost parity with the dollar down here in the summer, but we did climb back up. So you can see here, the euro is about flat for the year. If we go over to the other four currencies we take a look at, pound was basically down all year long, but it wasn't a big steep one. It was just, look at this, drift down. We finally got that crescendo where pound dollar got to like 104, almost to parity. And that was the bottom. That was the capitulation bottom. You can see we traded off that point, still down for the year. The pound is just telling us it's not really the best. It's not the worst. We come over here to CAD, and I think CAD is the story of 2023. It was one of the best performers at the first part of the year. Now, I don't want to take away from Canada. We've got a Canadian here, Ankit. But to me, the CAD was simply pulled up by the dollar for most of the first 9 months of the year. It was just riding the coattails of the dollar. I know that's very upsetting to Canadians to say that. But here's when they uncoupled. Now, look, the dollar weakened. The dollar weakened quite a bit after October. But the CAD completely came apart. I'm going into this year with the Canadian dollar possibly being the worst currency of the year. What do you think about that call, Ankit?
Well, this is definitely. I mean, if I take a look at the charts, everything is really setting up for the CAD to take another plunge lower. But I think it all comes down to the central banks. Right now, I mean, if you take a look at last year, Bank of Canada was really the most hawkish central bank, and they were the first one to make that move, and then the U.S. followed that suit. But you can see, like, a lot of these movements were kind of driven by the central banks and the expectations. So I think the first part of the year, CAD can be the weakest, but I can see a shift happening. And I think this is the kind of a theme that we need to kind of focus on in 2023. 2022, every currency had its own moment. They all had its own story. You know, Kiwi was the worst currency throughout the year, but then the last quarter, it actually ran up about 10%. I mean, on a currency basket, it was up 10%. So you can see these movements are very powerful. And I think you just have to really look at these currencies and these stages that they're in and the timing for it. And I think that was the difficult part for some traders in 2022 when these big shifts are happening. But I think as I take a look at into the next year, you know, I think there's a lot of focus going to be on economic numbers, inflation numbers, and the central banks. And I think that story is continue to going to play out. But for first part of this year, for the first part of this year, I think CAD could struggle. But later on, I think if the dollar pops, I think the CAD will kind of rise with it. So I think there's a lot of strong movements are taking place. China coming back online had a big impact on currencies like the Kiwi or even the Aussie to strengthen a little bit. So I think 2023 will be another year where we might be super bearish at one point and super bullish at one point. So that's my outlook for CAD this week.
Of course, we're traders. At Maverick, we always say we just want to be on the right side of the trade. So all the things that we're talking about, we call it cocktail talk. There will definitely be a time in 2023 where I'm long CAD and short the yen. That's what as traders, you just simply go to where the action is. A year is a long time. We all know there's going to be probably 5 or 6 major moves on every currency that happens through the year. Let's take a look at the Aussie, because the Aussie was the currency I thought was going to be the best last year. Let's go back to where we were in 2022. Australia and New Zealand had really locked their economies down, and we are just coming out of COVID. And I thought, we're going to get that opening story to where people start to travel a lot. And what happened was that whole area, China, was really locked down all year long. And we didn't really get the economic growth out of that area. I think this is a wild card here. I would literally flip a coin on what is going to happen this year with China. If China recovers and China can come out and put in some economic growth into the world economy, then for me, the Aussie Kiwi is the story. Here's the problem. I don't buy that story. I just don't know that the Chinese economy is in a place where it can really, really contribute a lot to the economy. They have a lot of debt. They have a lot of overbuilding they've done. They've got this lockdown they're getting out of. I just don't know. So I would love to be more bullish on Aussie and Kiwi, but I just can't be. So let's take a look at what our outlook is. I've got Aussie and Kiwi at the top, but I just want to make a caveat that it's only because everything else looks worse. I don't love these on the long side, but I definitely don't love Swiss franc. I don't love euro. And I think the dollar is likely going to give up some more of its gains that it had and take the CAD down with it. So just from default, I'm looking at what's going to be the best. I like the yen. The yen is my number one pick for the year. And I think the yen is going to be the best currency because I think the Bank of Japan is finally having to move. And we got killed in the yen. The yen got killed last year because of how dovish they were. Now they're the only central bank that's really starting to move off the bottom. I like the yen best, and I'm putting down the Aussie and Kiwi as an if China can recover and produce economic growth of the world, those will likely be carried along with it. Anka, what's your call for the best currency of the year?
I kind of agree with that. I think the yen, the Bank of Japan, is really the big play that I see in the next year. Here's another thing that I'm looking at into the next year is if you take a look at 2022, what was the risk on currency was the risk off? Meaning when there is a flight towards safety, what currencies get really bid up? 2022, it was just the dollar. And actually at one point, we actually saw Swiss franc that really took the lead as well. So, I mean, if you take a look at dollar Swiss franc, I found that fascinating for 2022, that dollar Swiss franc was almost flat for the year, which means that dollar and Swiss franc were actually equally very strong. So why the Swiss franc was catching a bid is because the yen, which is a traditional safe haven currency, was not really acting as one up. So I actually see a big trade happening between those two where, we might see a switch where maybe yen gets better than the Swiss franc. So maybe Swiss franc, I'll put it down to the weaker currency in case we see that change happen. But I think everything is kind of riding into the whole, if the markets will really break this Bank of Japan policy for yield curve. And I think that was the big play. As far as all the other currencies goes, I think we'll probably see a slowdown if the rates start to kind of take a pause a little bit, then we'll probably see a bit of a race to the bottom. I mean, if you take a look at 2022, outside of this dollar pairing, everything else really held in well. Like the Aussie held in okay, the Kiwi was okay by the end of the year, but as we look into the reopening play, we might see Aussie and Kiwi do really well in the first part of the year. But I think at the same time, we really have to take a look at what the risk sentiment is going to be, because those things will hurt and help those currencies. I think dollar, if there's if the markets are again weakening, or we're having a capitulation move towards the downside, we might see the dollar do well in that part. So I think you really got to pay attention to the risk sentiment. And based on that, I think these certain currencies will do better and worse. So that's what I look for in 2023.
Thank you so much. And let's finish it off with our crypto outlook. Now, last year we said the bubble's going to pop. It popped. Take a look at these performances. Bitcoin down 65%, Ethereum down 67%. So in Bitcoin's history, there's been 3 moments now where Bitcoin and other coins have lost 60, 70, 80% of their value. I want to say 2016, 2019, and now 2022. Each time, they took a little bit of time to come back alive. So if you take a look back at the long-term charts, you get it slammed, it has a little bounce off the bottom, and then it goes sideways for a long time. I think we're basically like that this year. It was a tough year, and we saw a couple things really hit the system. We saw major bankruptcies from Celsius and FTX. Now, what this did, this shook the confidence in this new asset class. People were buying this asset class because they thought, okay, this is safer money. And they found out it wasn't. It was not safer money in the end, because the companies that held their money weren't regulated, and they ended up basically stealing from people, or they over-leveraged themselves and lost customer deposits. That really shook the world of cryptocurrency. And it really took a lot of the people that were on the fringe and said, hey, I no longer want to invest in this. So at this point, all you really have left is I'm going to call it serious money. You've got the crypto believers that have been in there since 2015, 2016 that are never going to sell. And then you've got the institutions that are in there. Now, right now, the institutions, they're not going to buy stuff that isn't going up in value. And the long-term people, they don't have any more money to buy anymore. I just see cryptos really stuck. And if we take a look at the charts at the end of the year, you can see at the end of the year, all the damage was done at the first of the year. And you can see at the end of the year, we just really drifted lower. All the damage was done, and we just drifted lower. And so what we are seeing a little bit of a bounce in January. And this is exactly, again, if you go back to the big moves down in 2016 and 2019, we saw the huge drops, 80%, a little bounce up, and then we just simply go sideways. So that is my call for crypto. Look, we're going to have a couple rallies, and these rallies are going to be great trading opportunities. So look, we can absolutely trade crypto. We're traders. We're small. We're fast. We'll get in. We'll get out. We'll make our profits. But I think for the whole year, I see cryptos being flat, up or down 10%, and that's about it. Anka, what do you think is going to happen with cryptos?
Yeah, I mean, I kind of agree with that thought. I mean, if you take a look at where the crypto did really well is when, people had a lot of money at the low interest rates. I think this is not the case anymore. Markets are different. And I think the biggest risk for 2023 is recession risk. And how is that really changing people's behavior? I think the people that were really getting involved in cryptocurrencies got burnt or burnt through the cash. So I think you really need that the incoming flow for the funds to kind of keep propping the crypto market. I don't see that. But again, meanwhile, I do see some big moves happen, and then maybe those moves get reversed. But I think it's towards the end of the year. Thinking that recession risks are very high for 2023, I actually don't see the cryptocurrency being the best place to put your money at. I think there will be better areas to kind of put your money to work at, but the cryptos are not the place to be. I think this might take a little bit longer in markets to kind of go in the rate cut environment to really see that area prop up. But I think Forex is definitely a better place to be, as it was for the most part of 2022. I think that would be the best place to be for making trades and looking for a better investment vehicle compared to the crypto markets.
And I heard people make the argument that cryptocurrency would do well in recessions. And I remember thinking that argument, like, that's not true. It's a risk-on asset. It's an asset that people buy when they have extra money. That's a risk-on asset. And I remember having some arguments with people. Well, I think 2022 showed that cryptocurrencies are the risk-on instrument. And if we don't have a big risk-on move where people have a ton of money and they're throwing it around like we saw in 2021, crypto is not going to benefit. So I'm with you, Ankit. I think the crypto, we need to spend some more time repricing things, and the economy really has to turn around and get into a bullish economy before crypto has the chance to make the kind of runs it did. So I think we're on agreement on that one. So let's go through the predictions real quick. Flat to slightly down equities, higher interest rates, good commodities. We think gold, materials, metals, chemicals, they're going to be up nicely. Oil likely flat. In currencies, I've got the dollar and the CAD weakening, and I've got the yen strengthening. And I really think what might happen is the market might push the BOJ to have to go further than they want, because the BOJ has been fighting it, and the market, their bond market, has been pushing up against their levels and pushing through it. And every time it does that, the Bank of Japan has to go in and spend money to push it down. We saw what happened when the Swiss franc tried to do that, when the Swiss National Bank tried to do it. When they finally gave up, there was an explosive move to the upside on Swiss franc. I'm not saying that that's what happens, but I'm saying that that's a big risk this year, that the Bank of Japan may just have to abandon its interest rate controls. What do you think about that bold call, Ankit? And then we'll wrap this up.
I agree with that. And I think this is a very similar conversation that we were having the entire 2021. Are we in a bubble? Yes. Can we get the timing right? No. And I think that's where I am at. I mean, I spent the last 2022, I called when those bank interventions happened. I was able to call those, but again, those took a lot longer than I could actually anticipate. I was totally wrong on how long this Bank of Japan will sustain before they will crack. So I think as we take a look at this next year, it's all about timing. I think it's going to be very tough. I would say that once that pivot happens, there will be a lot more to follow, but getting the timing right might be the most difficult task. And I think looking from 2022, I'm actually just going to just trade the markets and not really bet all my chips on that play, because it might take a lot longer than you anticipate for that to turn out. How is this going to end? It might end disastrously. It'd be a disaster towards the end. But how long it's going to take, I think that would be a good question for 2023. So don't go after that trade. Put all your chips in the same basket. I think pivot will, when the pivot happens, I think there will be a lot more fireworks after that. So
okay,
that's my outlook, Rob.
Absolutely. The timing. And look, this is why, let's call this the bold call that we're making, well, at least that I'm making in 2023, that the Bank of Japan cracks and runs away from their interest rate controls and causing everything to spike. That is my bold call this year. And here's the great thing. I'm not calling any timing. I got 12 months to look smart and to pat myself on the back. And look, I might have to show up next year and say, okay, that didn't happen. But I agree with you. Don't try to get the timing right on this one. But this is why we are actually going to be warning our traders for most of the year. Be cautious being short yen. Just be cautious being short yen, because we saw that happen with the Swiss franc in 2015, 2016. I can't remember when they did it. But the Swiss franc moved like 20% overnight. So be careful, be careful, be careful with trading the yen. All right, let's go ahead and wrap this up. Darren, do you want to take us out?
Yeah. So good conversation. Glad everyone could come. What are we going to be doing here in 2023? We're going to continue to add great traders. I mean, this is the lifeblood of the firm. We love it when you guys are profitable. We love it when you manage your risk. So we're looking for people just like you that want to come trade with us. Now, we're not going to have a spring summit, and that's due to inflation. The cost of everything has gone up, from hotels to air travel to restaurants, and it's just it would have made the cost of the summit just unsustainable. So that's unfortunate. We'll take a look at 2024 and see what we can do. Just kind of carrying on, we did, in 22, we added that psychology corner. We're going to continue to expand that out. And we also are going to have, the handouts. We're going to separate out the handouts so you have a separate menu for the handouts for your trading plan. That should make doing your trading plan a little bit easier sometimes. And we're going to continue with the expansion of the multimedia, the social media presence. And we're really looking at how can we improve that content delivery. How can we make it more succinct? How can we make it easier for our traders to get to? We're taking a look at a bunch of different things, but that's what we're going to be focusing on at Maverick in 2023. So I just want to thank everyone for attending tonight. Have a good trade in 2023. We appreciate everything that you guys do.
Yes, thank you so much. Let's have a great year this year. Goodbye, everybody.